Hello everyone, welcome back. I hope you're still enjoying your summer. Fall is just around the corner. Pictured here behind me, beautiful fall colors on an unknown lake in Canada. I think this picture was taken last year because the last time I looked, the colors weren't this beautiful yet. But you know our country, it just gets beautiful every season as it keeps changing. And I'm feeling pretty good this morning. I'm in a good mood because I had my morning coffee. Here I am out in the woods just behind my place, all decked out in my I Choose Canada gear, having my morning coffee. I'm ready to go. So in this video, let me explain how Canada and the United States are on sort of a parallel direction, but diverging at the same time. And I think that Canada is in better shape. Here's where our two countries are on the same trajectory. And this news is regarding the United States, reported here on Bloomberg. Negative US jobs data keeps on coming. And the article goes on to read that applications for U.S. unemployment benefits jumped last week to the highest level in almost 4 years, indicating employers are firing more workers. Initial claims rose by 27,000 to 250,000 in the week ending September 6th, the highest since October 2021. And with respect to Canada, reported here on a TD Bank site, Canada's economy sheds jobs for the second straight month in August. Unemployment rate hits new cycle high. Canada's economy lost 66,000 jobs in August, adding to 41,000 jobs lost in July. The job losses concentrate in part-time positions, while full-time employment was little changed. Now, why is that the case? Well, because the summer is almost over in Canada, and there was a jump in employment at the beginning of the summer because of our I Choose Canada movement, the fact that a lot of Canadians were vacationing and spending time in our own country rather than traveling abroad. There was a big bump in our tourism industry, a big bump in hospitality and restaurant sales. And those industries over the summer hired a lot of part-time help, and that helped boost jobs initially. But now that winter is approaching, there's been a loss of jobs. That's the explanation for Canada. For the United States, the explanation is more blunt. It's the fact that it's the US that's imposing tariffs on the whole world. Companies in the United States that import things from around the world, which is basically all of them, have to pay more now for those products, and that's squeezing their profits. And one of the things that was predicted, I predicted, and many economists predicted, is when companies' profits are squeezed, they cut back. And the first thing they always cut back on is giving their employees raises and hiring. So not a good story on the job front for either country. We'd much rather see job growth in both countries. That would have been good news, but that's not the case. Now, this is where our two countries seem to be diverging. Behind me here is, from the Trading Economics website, is Canada's inflation rate monthly. It looks like it's well under control for April, May, June, July, and in fact, the August number is at about this 1.7%. And you can see that a lot of numbers on this graph here are in between that 1.5 to 2% range. That's the range that the central banks in the world, including the Bank of Canada and the Federal Reserve in the United States, that's the target range for what they call healthy inflation, a healthy rate of increasing prices that's not too high and not too low. That's their target, and it looks like Canada's inflation rate is very well behaved now. In contrast, the US inflation rate, same source of data, same graph, well above the 2% target and showing signs that inflation may be increasing again in the United States. Now, why is that? Why are our two countries diverging on this? Well, it's because the United States is the country that's charging their industries more, a tariff, a tax, on everything they import from around the world. If US corporations have to pay more to import things, and they're importing these things to manufacture stuff or to use in a product that they're going to sell, if their input costs are going up, well, they're going to raise their prices. And that's exactly what they're doing. That's the definition of inflation. So US companies that are being squeezed by these tariffs, this Trump tariff tax on everything they import, they're doing two things. They're firing people and they're raising their prices. This is a much worse situation than Canada. But now here's where it gets interesting, okay? Reported here on Yahoo Finance regarding Canada, the Bank of Canada to cut rates September 17th, at least one more to follow this year, says a Reuters poll. And what they're referring to is that the Bank of Canada is going to have a meeting on September 17th to decide whether they increase or lower or keep steady the overnight rate. And one of the biggest factors they use to decide this is what's happening with inflation. So for Canada, inflation is under control. It's below 2%. So the Bank of Canada has some flexibility in being able to lower rates. They can lower rates to stimulate the economy, to help out a job creation, to give a little bit of a stimulus to the economy, to make borrowing money cheaper for companies, encouraging them to spend money and hire people. Decreasing interest rates is a luxury the bank has in order to try and stimulate the economy. So the Bank of Canada has really no reason why it shouldn't lower interest rates, because inflation is in check in Canada. Now, also reported on Yahoo Finance regarding the United States, and this is a little bit of a head scratcher, September Fed rate cut a done deal, at least one more to follow by year end. The same Reuters poll. Same people that were polled saying that the United States, the Federal Reserve in the United States, will also lower interest rates. But I just said that the Federal Reserve and the Bank of Canada, one of the most important factors they look at when deciding whether they lower rates is inflation. And inflation in the United States is above that target rate. It's getting close to 3%, and it looks like it's trending higher. So why would the Federal Reserve want to lower interest rates now? Apart from the fact that Donald Trump consistently berates the chairman of the Federal Reserve and wants to fire him and calls him a do-nothing loser, too late pal, and calls him names and wants to influence him to lower rates. Besides that, I believe that the Federal Reserve is making their decision independently still. But it's gotten to the point now where they are more concerned with the terrible job market in the United States. That's become a more important factor than the increasing prices. And this is a really tricky situation for them, because now if they lower interest rates to try and stimulate the economy, try and make borrowing cheaper for companies so that they may want to hire people, they may want to pay their employees more. If they do that and stimulate the economy, that could also have the effect of causing increased demand, making money cheaper, and having prices go up. Decreasing interest rates has the effect of causing inflation as well. There's always a balance, and that's why central banks don't usually move too aggressively as they're increasing or lowering rates. They do it gradually, and they see what the effect is on the economy, and they try and make sure they don't overshoot in any direction. But now the US Federal Reserve is in the not so envious position of trying to decide, are we more worried about increasing prices and inflation, or are we more worried about the loss of jobs in our economy? And it's important to point out that you would counter those two things with the opposite decision. If the jobs market in the US was fine and the economy was chugging along, and all they were worried about was increasing prices and inflation, they would raise rates. If inflation was under control and they had weak job numbers, like we do in Canada, they would just lower rates. But now they're in this sticky situation, knowing that whatever they do, they're going to help one of those and hurt one of those. So I don't envy the position of the Federal Reserve now, trying to decide what the right thing to do is with all the pressure they're getting from the White House. Perhaps the right thing to do is to just leave interest rates the same, leave them unchanged, and see what the trajectory of inflation and jobs is for another couple of months. That's a possibility, but according to the Reuters poll of economists, they say that it's a done deal, that he has to lower rates this time. And the whole thing really is a conundrum, because this situation really hasn't been seen before, where you have an administration or president that has just thrown a wrench into the economy, poured sand into the gears of a well-running economy by burdening it with this huge tax on everything. The worldwide tariffs the US has imposed on itself, it's a tax on themselves, is the highest it's been since the Great Depression. This is all uncharted waters, uncharted territory, and I have no idea what's going to happen. I make no predictions. But what I wanted to point out in this video was that, at least for Canada, the Bank of Canada decision to cut rates in September, which will probably be what they do, is the correct decision, I would say. And it's a well-needed stimulus to our economy as we continue with this transition, helping our companies with this stimulus that can be provided with a rate cut without fear of triggering new inflation. In the past, we've always looked at the United States. If prices start rising in the United States, you could almost predict that, well, they're going to start rising here as well. Because if the reasons for price increases are global in nature, it'll affect pretty much all countries. But here we have one situation where the United States is doing it to themselves. They're causing their own homegrown inflation thanks to their self-imposed increase in taxes, which is their tariffs. So in conclusion, I hope you understand that Canada is what I would say in a much more predictable and a better situation. Our central bank has seen this type of economy before in Canada, and they know what to do. Whereas in the United States, they have a much more complicated, a much more difficult situation. And it's their own fault. So get ready for the fall, everyone. You're going to be able to snap pictures like this all over our country. And if you do and you want to share them, check out the I Choose Canada group that I started. I'll leave the link for it here in the video description. Subscribe to the channel if you're enjoying my content. If you want to support this channel on a monthly basis, consider becoming a member by clicking the join button below. Have a fantastic rest of your day and your summer, and I will catch you all on the next one.